In January, gold hit the highest price in human history. Not just the highest number, the highest price ever paid for an ounce of gold even after adjusting for inflation. Higher than the panic of 1980s, higher than any crisis in living memory. 5 months later, it had fallen almost 30%. Every major bank that called for $6,000 has quietly cut its forecast. Goldman took $500 off. JP Morgan cut a quarter off its year-end target. Bank of America, the bank that floated $8,000 an ounce, now expects an average around $4,300. Indian families who bought near the top are staring at losses. Every headline says the same thing: the gold rally is dead. And here is what almost nobody has reported. While the price was collapsing, the buyers who started the whole thing, the central banks of the world, were buying even more of it. Not all of them. One country was dumping gold as fast as it could, and we will come to why. But as a group, they bought more. In the first 3 months of 2026, as gold fell out of the sky, the world's central banks bought 244 tons of it, up 17% on quarter before. China's central bank has now bought gold for 20 consecutive months. And in June, as the price was falling, it bought 15 tons. It's the biggest purchase of the year. It did not sell into the crash, it bought the crash. So the people who caused the greatest gold rally in modern history looked at a 30% collapse in the price and stepped in. The obvious question is, what do they know? The answer is a sentence, and it explains every gold rush in the history. When countries stop trusting money, they buy the thing that needs nobody's approval. And by the end of this, that sentence is going to stop being about gold, because it's the same question sitting underneath your own business and almost nobody asks it. What do you own that nobody can switch off? The reason the central banks started asking begins 4 years ago, when a decision taken in Washington in 48 hours. February the 24th, 2022, Russia invades Ukraine. Within 2 days, the United States, the European Union, the United Kingdom and Switzerland do something that had never been done at this scale to a G20 nation. They freeze roughly $300 billion of Russia's central bank's reserve. Not a company's money, not an oligarch's yacht, the reserves of a sovereign central bank. Bonds, deposits, currency holdings sitting in Western financial institutions. Russia could still see them in a statement. It simply could not touch them. Now, these reserves were never legally seized. 4 years later, they are still frozen, not confiscated. Europe tried to take them outright in December 2025 and failed because Belgium blocked it. They borrowed the money on the open market instead. But for every other central bank on earth, the legal fine print was beside the point, because every central bank on earth had spent the entire post-war era parking its savings in US treasuries and Western bonds. Those were risk-free assets, the safe ones, the ones you hold precisely so that nothing can happen to them. And February 2022 proved that the safest assets in the world is only safe as long as you stay on good terms with the country that issues it. The question that went around every central bank on the planet in private, in rooms nobody reports out of, was very simple. What do we own that cannot be switched off by a phone call from another country? The answer was 4,000 years old. Gold sitting in your own vault in your own country cannot be frozen. It cannot be sanctioned. It does not care about your relationship with Washington. In the language central bankers use privately, gold is sovereign neutral. So the buying began. Between 2010 and 2021, the world's central banks bought an average of about 473 tons of gold every year. Steady, boring, unremarkable. In 2022, the year of the freeze, it stayed above 1,000 tons in 2023 and again in 2024. In 2025, it cooled to 863 tons. And pay attention to that number, cooled, because it is still nearly double the historical average. 16 consecutive years of net buying. But here is where the story gets genuinely surprising, and where almost every version of it you have read is wrong. Ask most people who is hoarding gold, and they'll say China, India, the usual suspects. The single most aggressive gold buyer in the world last year was Poland. 102 tons, more than China and Turkey combined. This year, Poland is out in front again. India, the country most culturally associated with gold on earth, bought about 4 tons. Effectively, it stopped. So, this is not the East hoarding gold. That framing is comfortable and it is wrong. This is something more unsettling. A European Union member, a NATO member, country that sits firmly inside the Western financial system, quietly buying more gold than anybody else on the planet. Poland is not preparing to be sanctioned by Washington. Poland is preparing for a world where it might need the money that does not depend on anybody. If you want to see how opaque the physical commodity world really is, who actually moves this stuff and how little of it you ever see, I broke that down in a video on commodity traders. If central banks kept buying, why did gold lose almost a third of its value? Because central banks are not the ones who set the price day by day. Speculators are. And three things turned against them at once. The first, the biggest, was the Federal Reserve. The entire rally was built on one expectation, that American interest rate would fall. Gold pays you nothing to hold it. So when rates fall and cash gets less attractive, gold looks better. Then inflation came back. The war with Iran closed the Strait of Hormuz in March and sent oil price above $120 a barrel. American inflation went back above 4%. And the Federal Reserve got a new chairman, Kevin Warsh, who turned hawkish. By the middle of the year, markets had stopped pricing rate cuts and started pricing rate hike. This is the exact opposite of the assumption the whole rally was built on. The second was Turkey. Turkey had been one of the greatest gold buyers of this cycle. Then the same oil shock that drove inflation drove Turkey's import bills through the roof. The lira came under attack and Turkey sold 58 tons of gold in 2 weeks to defend its own currency. That is what the gold actually is for, by the way. It is not a lottery ticket. It's the thing you sell when there is nothing left to sell. The third is everybody else. The rally to 5600 had pulled in hedge funds, momentum traders and enormous retail money. When the interest rate story broke, they left. In June alone, gold fund lost $8.9 billion. American funds just had their worst 6 months since 2013. The speculators sold, the price fell nearly 30%, and underneath all of it, the central banks carried on buying. Now the fact that should genuinely bother you. Nobody has to tell you how much gold they are buying. Reporting your gold reserves to International Monetary Fund is voluntary. There is no rule compelling a central bank to disclose what it holds or what it just bought. The World Gold Council, the industry's own body, says plainly that a meaningful share of central bank buying is simply never reported. And in its most recent report, it says unreported buying remained elevated. So look at China. China's central bank reports buying a few ton a month. Modest, nothing alarming. Now look at how much gold physically entered the country. In the last 3 months, this year, Chinese custom recorded 316 ton of net gold import, up more than 300% on the last year. 316 tons went in. A fraction of that showed up in the official numbers. Some of that is jewelry, some is private investment, and some of it, nobody outside a very small number of rooms in Beijing knows how much is state buying gold without telling anyone it is buying gold. That is the actual story of the last 4 years, not the price. The price is noise. The story is the most powerful financial institutions on earth have been quietly rearranging what they own for reasons they will not say out loud, and they are under no obligations to show you the receipts. Here is the whole cycle in one line. When countries stop trusting money, they buy the thing that needs nobody's permission to exist. Gold pays no interest, it produces nothing, it sits in a vault and it costs money to guard it. And it has held its purchasing power across centuries, across empires, across currency collapses and revolutions and wars, because it's the only major asset on earth that is not simultaneously somebody else's promise. A dollar is a promise, a bond is a promise, a bank balance is a promise. Every one of them depend on an institution choosing to honor it. An ounce of gold in your own vault is not a promise, it's just there. This is the reason behind why the buying has not gone away just because the price fell. American federal debt is now just under $40 trillion, growing by roughly $2 trillion every single year. Sanctions remain the West's weapon of choice. Nothing that scarred those central banks in 2022 has been unscarred. The price of gold fell 30%. Not one of the conditions that caused central banks to buy it has reversed. At which point a reasonable person asks the obvious question, should I buy gold? This is the wrong question, and it is not the one this story answers. The lesson is not buy gold. The lesson is what the buying tells you. The most powerful financial institutions in the world with the longest time horizon and best information available to any market participant, spent 4 years quietly moving their savings out of somebody else's promise into a metal. They did it during a rally. They kept doing it during a crash. They are not trading. They are hedging against a version of the future they are not willing to describe to public. And Indian households have been running the same hedge for thousands of years. The instinct that makes a grandmother in Coimbatore turn her savings into gold jewelry, that quiet distrust of paper, of banks, of governments, of promises is the identical instinct now driving the People's Bank of China to buy 15 tons in a single month. She was never being sentimental. She was doing at the scale of one family exactly what the world's central banks are doing now at the scale of nation. And now take gold out of it completely. Because the thing that actually happened in 2022 was not about gold at all. Russia did not go bankrupt. It did not run out of money. It did not default on anything. Its saving was simply switched off by other people for reasons that has nothing to do with whether Russia could pay. This is the part every central bank on earth understood in 48 hours. Every asset you own is somebody else's promise until it's not. And this is not a lesson about geopolitics. It's a lesson about your own business. Look at what you actually depend on. The followers on a platform that can delete your account tomorrow morning. The storefront on a marketplace that can change its algorithm and half your revenue by lunchtime. The one client who is 60% of your revenue. The license, the registration, the landlord, the bank, the payment rail. Every single one of those is somebody else's promise. They all work beautifully right up until the person on the other side decides they do not. And you will not get a warning because the decision will not be about you. So the question worth taking out of this is not whether you should buy gold. The question is, what do you own that nobody can actually switch off? If the answer is nothing, then you do not have a business. You have a permission. And permission is the thing that gets taken away by people who never explain why. That is what those central banks were buying in 2022. Not a metal, an asset that needs nobody's permission to exist. In the short run, the price of gold is a bet on American interest rate and very little else. That is noise. The price of gold will do whatever it does. But what happened over the last 4 years was not a rally. It was not a crash. It was a vote cast quietly in tons by the people who manage the savings of nations on what kind of world they think is coming. And they are voting differently than what they have for the last 50 years. Because when countries stop trusting money, they buy the thing that needs nobody's permission to exist. They kept doing it through the rally. They kept doing it through the crash. And they are not required to tell you how much. This channel pulls apart the slow financial shifts hiding inside the daily news and shows you what they actually mean for the people whose savings are sitting in the middle of them. If you want to keep seeing them, subscribe. See you in the next one.